devil in a red dress. Call 911, I'm a killer. You know I hate to confess. Bang, bang, got my hand on the trigger. The devil in a red dress. Call 911, I'm a killer. You know I hate to confess. Bang, bang, got my hand, bang, got my hand, bang, got my hand. Call Devil in a red dress. Call 911, I'm a killer. You know I hate to confess. Bang, bang, got my hand on the trigger. The devil in a red dress. Call 911, I'm a killer. You know I hate to confess. Bang, bang, got my hand, call devil in a red dress. Call 911, I'm a killer. You know I hate to confess. Bang, bang, got my hand on the trigger. The devil in a red dress. Call 911, I'm a killer. You know I hate to confess. Bang, bang, got my hand, call.
Okay, hopefully if I did this right, we've got audio. Which would be better than my last couple of videos. Well, I hope everybody had a great day today. I know I have had a pretty good week. Sorry for taking the day off yesterday. I wanted to hang out with my kid. It was just a beautiful day, and today it's snowing and blizzarding, so I think it was time well spent. I'm going to start off with my portfolio. It was an awesome day. So far, I think I'm up $500,000 this week, a little over 300K yesterday. And then today I should be about 200K and across all my accounts. So it was a pretty good day. I cannot complain about being up $500,000. We might see a ray trace here soon, just because this is crazy, but I'll touch on that here in a second. Big winners today: Arc Genomics, Hood, PayPal. Love hearing that. PayPal was a big winner. I got 21K on that one. And then I actually did good on my Starbucks puts for 2026. That's kind of interesting. But then SoFi and Square, again, all great. Just a wonderful day across the board. The fintech world is starting to take off. So is Arc Genomics. And I'm pretty excited. This is where I expect to make a lot of my money. Not just in crypto, but this and then in crypto. So I'm pretty stoked. Anyway, Sold a decent amount of stuff today. Sold more hood calls. I need to update my portfolio. I'll do that tonight, I promise, so that you guys have it tomorrow. Just showing my allocations. Hood became my number one play. That's why I've been trimming, because it's just surpassed everything really quickly, including CleanSpark. Sold a little bit of CleanSpark earlier in the day. Same with BITF, Bitfarms. Did that when they were up about 14 to 10%. And then I ended up buying them back later when they were basically flat to red. So that was pretty cool. Sold some SoFi. I bought, NVIDIA, ETH, PayPal calls for 2026, even a couple for 2025 because I'm nuts. And then, let's see, WGMI. That's basically a diversified Bitcoin miner play. And yeah, I think that's it. Just a lot of that. So it was fun. Did a lot of buying. Love doing that. Other thing. So I have about in my altcoin portfolio, I have almost 200,000 in this account, and then I've got another 77 in another one. So I've gotten. I think I keep saying I'm not going to put more in. I think I'm done. This is done. I think it's enough money. I'm very happy with it. So all in all, I have about 275,000 in shitcoins, and that's probably where I'm going to stop. And yes, I consider Ethereum one of those. Moving on from crypto, we'll come back to it. So let's refresh here. I want to make sure I get this full thing. Yeah. So today, not a ton. Let me go full screen here. So today we got kind of mixed results. We seem to have some market breadth. Not a lot of love for energy, healthcare, and it looks like some consumer cyclical. And again, it was kind of hit or miss. There's a number of things that didn't really go anywhere. But that's kind of what I love. It's kind of what I love about today is the Dow Jones, like flat, red, S&P, these might not be exact final numbers, barely up. NASDAQ, barely up. Russell, up 1.4%. And the stuff we're in is up. If you're in SoFi, Hood, PayPal, Square, Arc Genomics, Okta, like just a ton of stuff, it's all rocking and rolling today. So very exciting to see when we're outperforming the markets. That's one of the funner things to me. All right, let's see how we're doing on fear and greed. Looks like we're at 78. That hasn't changed much, so we're still right in that extreme greed range. But if you'll look here again at the timeline, we've kind of just been coasting here. It doesn't look like anything that's getting ready to drop. If anything, it looks like it's establishing a base to go higher. If I was just looking at this in a chart form, it looks good. Oil is up today, 1.31%. I still think we're rolling over, so I don't care. That's what I'd put money on it, but I just don't care about the energy markets at all. All right, the dollar. The dollar is sitting above the 200 moving average on the daily, but it's just kind of hanging out. Looks like it could drop. So I don't know. Not a lot of signal here right now, but we're very chill in the dollar. And so I think that's a good sign. It shows that we're less concerned about risk because people aren't using the dollar as a flight to safety. And I like that. That's good stuff. Now, economic data, we had a bunch today. We saw additional weakness in durable goods. That got better. If you exited out transportation, it looked like a better number. It was only negative 0.3%. I hate month-over-month numbers because I don't think they give you enough signal. So I'm going to skip the rest of that. But basically, they underperformed, which is showing greater weakness in the economy, which, if anything, I would say leans towards, the Fed lowering sooner. Redbook year over year. Again, this is the one where you have a bunch of different retailers. Let me see here. Redbook 3.5. See if I can find the explanation. I thought it was in here somewhere. Sales weighted year over year, same store sales growth in a sample of large U.S. General merchandise retailers representing roughly 9,000 stores. The index represents 80% of the market. So from a retail perspective, this gives us a really strong view of how things are going. And you can see where we got a burst before, but we're kind of tabling out now that the new year has passed and that the Christmas season has passed. And so retail's just kind of stable. It's above zero. We like that. But it's not really rocking and rolling. So we're not seeing a lot coming out of it. Let me do this. I'm going to zoom in just a little bit more. All right, home price index and the Schiller and Case Shiller home price index. So these are just two different ways of measuring home price. They actually all look pretty strong. So again, you got a market where if rates start to come down, these houses are worth a ton of money, and 1/3 of the country has 35 to 40% more equity in their homes than they had before the pandemic. I just think this is a rocket fuel for more upside. A house price index, let's see here. We're ticking up. Nothing crazy, but again, look at just how high this was for a while. So this is still a great number. And it reiterates the Case-Shiller number. Now, consumer confidence, we're at 106. I can't get the graph on this. Let me see if I can. Now I can't. So we're not even going to look at that one. Basically, it's lower than forecast, which I think is fine. Now, the Richmond Fed Manufacturing Index is showing lower than forecast or consensus. And so the manufacturing sector is weak. I think it's going to be that way across the board for a while. If we look here and we go back, out 25 years, you can see where we just really been hanging down here. Reminds me kind of like the end of 2008 economic cycle, or the pandemic, or the dot-com bubble. A couple years later, it's like we're getting some of the pain worked out right now of the manufacturing sector. But again, if rates start to come down, I think that reignites for a number of reasons. If nothing else, real estate, but just a whole lot more than that. Now, the interesting thing is the Dallas Fed Services Index actually did better than expected. So they were expecting -6 on this. We got -3.9. So services almost seems like it's getting ready to recover. We need to see a read above 0 to confirm that, but it's looking okay. Now, services revenue index outperformed. So this is interesting. So the service sector actually had higher revenues than anticipated. And this is the kind of stuff you want to see. You want to see that they're still able to make money. They're not having to discount the heck out of stuff. So the service sector of the U.S. economy looks good to me. It doesn't look weak at all. Right now, we're still looking at June probably for the Fed lowering rates. So we've got about a 50% chance of that happening. 60% chance of that happening for at least 25 bips to 50, with 25 being the most dominant. And so I think June is probably going to be the date, but I'm still leaning towards, May maybe turning into that too. All right, real quick. We're going to talk, the rest of the stuff I want to cover real quick is Bitcoin. It's all Bitcoin right now, and that will be the prevailing narrative, I think, for a while. So this is a post from my friend Will Clemente. He's brilliant. He's a young dude, done with college and doing big things now. But he had this Fidelity report where it shows that for these different funds with Fidelity, what they're recommending for crypto exposure. And it's like 1%, 2%, 3%. So you could see where these funds now are starting to say you have to have exposure to this sector. And that, I would say the vast majority of that would be Bitcoin. But this is just the beginning. This will be a prevailing narrative throughout this cycle over the next year and a half. You're going to see more and more of this with good reason, because it is the best store of value on the planet. And people are going to start to realize that. Real quick. CleanSpark had a really cool post. They're over 15 hexahash. Love that. This is my favorite crypto miner. I think they're the best managed out there. Jack Mallers, this guy is a stud. His, I think it was his father that helped form the Chicago CBOE index. So, and he's a stud, man. He's just a brilliant guy. But he's showing how they're branching out to multiple parts of Africa now with Strike, their product. And it's 100% Bitcoin. It's like lightning payments. It's great. And it's exciting to me to see, very poor countries around the world getting to benefit from Bitcoin. And it's happening. All right. Bitcoin just hit a all-time high in China. So this is like 20-ish plus countries now, maybe 25, that have already seen new all-time highs in Bitcoin. But not just China, Taiwan, right across the way in the water here, hit a new all-time high too. On top of that, we're seeing Bitcoin ETFs getting close to the market cap. Now I say close, but like it's still got a ways to go. It needs to double pretty much for the Bitcoin ETFs to get to gold's ETF value. But that's going to happen this cycle. We're going to surpass gold ETFs for stores of value this cycle. So you need to wrap your head around what's going on, because we got 50 days, 49 now and change for you to, before the halving, before the new issuance gets cut in half. And I wanted to talk too, not just that, people who haven't watched my Ethereum video, please do so. I posted it again today on X. we're seeing an acceleration of the amount of deflation that's happening on the Ethereum network. And here in a couple of weeks, about 2.5 weeks, we're going to see a new EIP getting deployed that will help reduce costs on the layer 2 substantially, which will make this network a lot more viable for the cycle. So you guys gotta get on board with this. You gotta start understanding what's coming. And let me see here. There might be a couple more things I wanted to show. That might be it. That might be it for that. Okay, so let me jump over here real quick. So crypto altcoins. I wanted to show you what the year has been like so far, okay? So, well, this is just the last month. This isn't even the year. I might have a year-to-date tab, but we'll just stick with this for now. So this is in the last month, roughly since the end of January, what you're seeing out of performance for the top 100. We are very much entering an altcoin season here once Bitcoin tops out. And it could do that at 57K. It might take a break here soon because we are hitting a key level. Or it could go even higher. And this is what I wanted to show you next because this is crazy. Let me zoom out here. So Bitcoin hit my target range way quicker than I thought it was going to. The inflows are just ramping up with these Bitcoin ETFs. We're seeing just crazy numbers. Let me take this out real quick. So you can see the range I had built. And I've said, hey, we could even get over 65K by the halving, this next fib level up here. Well, here's the thing. We're sitting right at peak volumes over here. If you look over to the right, you'll see how we kind of have peak volumes right here. If we get above like 57.5 or something like that, 57.4, and turn this into support, we will very, very quickly be at 65,000 for Bitcoin's price. So I think this isn't even a crazy out of the like nuts statement. I think in the next few weeks, we could see $65,000 to $69,000 Bitcoin and all-time highs. So when I say you don't have a lot of time, you just don't. You don't. And you need to realize that because it's coming fast. Yeah, 65 to 69 right over here. And then we could be off even more. I know there's people that said 100 by the halving. I don't think that's possible. But 91,000 by the halving, it could happen. Doesn't have to, but it could. So just remember that shit. Guys, you heard it here. All right. Real quickly, I'm going to go over some of the other things I like to talk about, my fintechs, and then we'll jump into others that you guys have requested, starting at the top. So let's pull up some SoFi first. That seems to be a good one today. So I was talking about this last week, how we could rock and go a lot higher. We have done that today with a 7% up day. I'm going to start making a lot of money off of this if we keep this up. So we're looking at hitting the .786, so about 950. 950 is our next level. The way we're going, I think we're going to blow past that as long as the market stays positive. And so I would expect, 1180s here soon on SoFi because that's what this pattern, it's been coiling up. The slant I said was, becoming less and less each time we were going down and popping up. And this is about as good of a rounding bottom as you can get. I mean, how round is that bottom? Baby got back right here. So this is a good one. She looks good. All right, moving on. Let's see here. So Square, I was buying a bunch of Square yesterday. It went up while I was in Vegas, so I didn't really pay much attention to it. And then it started dropping and everybody was freaking out. I'm sure of that. And so I just kept buying. So I bought a bunch of stock yesterday and I even bought calls, 2025 calls, which I said I wasn't going to do anymore, but it was just too good of a deal. We're up 4% today. I think that could have been the bottom. If you look over here at the volume profile, we're establishing a really nice shelf. And when it's a nice, smooth shelf, it's a really positive sign and usually ends up playing out well. So I could see us testing back up towards the 82 range. And if we break above that and turn that into support, if we get up to 89, guys, it's going to be right off to the next fib at 116. This thing's looking ready to launch. It took its break, and now it wants to go higher. And again, as long as the broader market holds up, that's what I think is going to happen here for all these fintechs, for all this stuff I'm showing you right now. All right, Hood. Let's go. Hood has been up to a lot of good. A lot of good. This is the one I made a post about this, talking about narratives. I don't know how many people told me that Robinhood was a stupid investment and that nobody would buy them again or trust them after what happened with GameStop. And that just isn't true. That isn't true. Because as I said, once we broke over this .786, we're just going to go higher. And that's what we're doing. And we're pretty easily, I think, going to make it to $17. The real question is, in the next quarter or two, max, do we make it to 30? And I would probably give that a 70% probability, maybe 75. And I make a lot of money, at least $1 million. I don't know, something like that. So I'm okay with that. Now, PayPal. Everybody loves to hate PayPal. It has been my worst investment in the last 4 years, maybe. So, fair. But today, up another 1.4%, and I made like $25,000 off of this. And again, the bar is set insanely low for this stock. So if we can get, honestly, if we can get above like the $65 range and start turning this into support right here where we had this downward trend line for years, 2 years, then I'm going to get excited and constructive about it. Not that I haven't been. I've already bought 85,000 in January 2026 calls, and I still have all my January 2025s. So I still have, with a $140 strike, like 4,200 calls now for January. It's pretty insane. But like I said, I'll tell you when I sell them. I'm not selling them. And I probably won't sell those until we break to at least this next fib at like 83. So I'll start selling my calls for that in 83, probably again at 97 at this next fib. And then I want to be out of January 2025, I'm going to be 100% out by 114. That's kind of my goal right now. So, but I'll start dialing out more aggressively each fib that we hit. And you're going to learn that that's how I do it. All right, let me see. ARCG. Gosh, so many good ones today. And the great thing about these plays, some of the ones I'm showing you, is these are 4 to 10x multipliers, easy, right? Versus the underlying for what I'm doing. So up 5% today on ARC Genomics. It looks beautiful. Really want to see it get up here to this 35, 36 range and then turn that into support. If that happens, it's quick and easy to 47 to 52. And again, I think within the next quarter and a half, we're going to see that. All right. I don't know how other stuff. Let me see here. Gonna look at, all right, CleanSpark and these others. I know I get a lot of questions from people about the miners. They're like, hey, this went up 4 times as much as Bitcoin, and now it's not doing it today. What's happening? And albeit, I can understand why you like the number to go up. You have to realize that if an asset has went up 400 to 500% faster than its underlying investment, which is going up quickly, that you got to give it a break every once in a while. It's not completely correlated with the price. It will retrace every once in a while. This isn't crazy. This is a buying opportunity. Could we go down more tomorrow? Sure. I think we could go down to the .618 here at 18 and test this. Wouldn't be crazy. And I think that would be perfectly healthy. And I would love that. And I would buy more. So again, just, you're here for the ride. And this one, and I trade in and out of this, but I do it slowly. You guys have to realize, like, Bitfarms and CleanSpark, even with all the price action we've seen on, Hood and some of the other investments that I have, like SoFi lately, this is still, like, these two are like my top 3 holdings. So I still, even though I'm selling some of this, I'm selling small amounts, and I'll update my portfolio allocation so you can see it. But that's what we're looking at now. I'll show BITF real quick, and then I'll start moving to some of the other requested stuff that you guys have. All right. So right here, Bitfarms down 1.67 today. Not crazy. Again, this one's a laggard. It's not as strong as CleanSpark, but that's not what you're buying. What you're buying in Bitfarms is 25% of the market cap of CleanSpark. And these guys have Bitcoin holdings, and they're expanding their hash. So there's some definite positivity with this. If they do well, I think they only have, like, I don't even know how many Bitcoin. I'd have to look. I'll have to pull it up, and I can do that in a second. But they have a smaller number, but with their earnings, if their earnings are coming out, let's see here, I think it's like, yeah, March 20th. So they've still got a while. They've got like 3 weeks now until their earnings come out. But if their earnings come out and they've got their Bitcoin holdings and that can help push them a little bit higher too, these guys could have a pretty good pop and run because again, they're 25% of the market cap of CleanSpark. So and their hash rate is getting better all the time. And this is a good performer. Like just energy costs, everything. I like it. So the fact that it got rejected at the .618, knowing that it's a laggard to CleanSpark, to me looks very positive too, and it looks like a buying opportunity. And if we for some reason got into the threes, like low threes, I would buy the heck out of this. Same with CleanSpark. If we got down to that .618, I'll be buying pretty aggressively and maybe selling out of some of my Fintechs, especially if they're going up at the same time. All right, let me go to the top here, and I will start getting caught up with chat. Sorry here. Somebody asked about January 2026 strike. I'll try and post something about that tomorrow, Shale. I'm probably not going to pull up like the options calculator and all that stuff. But if you haven't and you're trying to figure out a strike for 2026, you should watch my Options 101 video. It's awesome. It shows you the options calculator, shows you how to find which options chain to choose. And I will show you at least this. I will pull up. Let me go back to SoFi here. All right. So again, I gave some targets here. So I would expect if you're going 2026, I think that, $12 or even up to 22 here at this next level right here, not even near all-time highs yet. You'd still be down a ways, but I think 2022 is probably a good strike, and they'd still be down 21% from their high. The one thing I would factor in, though, with this, I actually like the shorter time frame better. Why? Because it's a bank, and I don't know where the economy is going to be sitting in 2026. We could be at an interesting point. I'm not sure. So from a call perspective, that's why I like the shorter time frames better, and I'm doing January 2025 for this one right now because I think it's just a better opportunity over the short term, and I get a little more scared and probably just in stock only as we get into 2025 and beyond. All right, here, let me see what we got. All right, moving on. CleanSpark, yes. LB, CLSK, looked at CLSK. Okay, PanW. Oh, yeah. The Nancy Pelosi stock. Okay, give me 1 second. This is the one everybody's gotten excited about since she's in it. I almost bought some. Probably should have. I mean, it looks pretty healthy here. We rejected right above the .618. We fell pretty hard. If you were a buyer in the 262 range, I think you got a good deal. Right now, I don't know. I can see us chop in this range. Maybe it even goes higher. Maybe there's enough momentum behind Pelosi's trade, which is insane to me, but that's how things work. So 365, maybe it gets to. And if it breaks out, then 470, 470 or something like that. But you got to remember their guidance wasn't that great. Let me pull them up here real quick. Oh, and for people asking, I will be doing Mara earnings tomorrow in the market recap. So that'll be one of the things we'll focus on, and we'll probably jump into the call from the market recap. Now, Palo Alto got like a huge net income boost, but I think it was their forward guidance. Their operating expenses went up a little bit. They had to dilute a little bit, and I think it was their forward guidance that, yeah, it's kind of flat for next quarter. And so it was unimpressive. People were hoping for more. But again, it's a good company. The growth is solid. I don't see any red flags here. So this isn't a bad one to own if you're just looking to do stock and not get crazy with options. I think this is a good one. All right, let me see. Cell H. Everybody loves Cell H. I think it's sparkling water or something. I don't like the fizzy stuff, so I haven't even done that. But let me pull it up here real quick. All right, so I will look at the fundamentals of it. I think they're strong, and then we'll just jump into the chart. Yeah, fundamentals are sick. Net income positive, growing like crazy, seeing them all over the price. But the stock has went up too. And again, I love this operating revenue versus their expenses. But we've also gained a lot. And the revenue estimates for the next couple of quarters are kind of flat. So that's interesting. Let's look at the stock. All right, stock is continuing to do well. Yeah, it wouldn't. I don't think it would be crazy for this thing to go to 84, but if it does that, it's also up 551% since May of 2022. So yeah, the fact that we're testing above the next fib here is good. If it got to like the 80s though, I don't know, man. I might be out at that because you're talking about like over a 20 billion market cap by that time. And how much are they netting? Let's just look here. How much is their net income? 20 billion, 83 million net income. I don't know. It's all right. It seems overvalued, and the P is 103, and it would be even higher. It'd probably be 150 or something at that point. I feel like this is a trade where it's done really well for people, and I would be looking to start to exit or dial out. I definitely would be dialing out of options personally myself, especially if we got near 80. I would get out because again, this thing since March of 2020, it was $1, and now it is 68 almost. The money was in March of 2020. That's when you wanted to hold this. Or even in May of 2022. That wasn't that long ago. That's less than 2 years. It was like $12. And this isn't a crypto, so it's not going to go to the moon. I mean, maybe. Maybe everything is now. At least for a while. Before it all comes crashing down. But I still think you want to be in Bitcoin. All right, I'm sifting through here. I'm looking at notes. Let me see. Did I skip it a couple? I hope I didn't. Oh, HIMS. Let me get into HIMS. Hopefully I didn't miss any of these here. Need to get better. Need to get better at filtering through comments. I'm glad I turned it into member only, man. There's no way. Woof, HIMS. Look at that. If you don't believe in fibs, then you don't know what you're talking about. I mean, look at this. It's perfectly hit it. Wow, 31%. That is beautiful. Congrats, dude. My friend Adams made a bunch of money off of this probably too. He's a big advocate. I don't know if he's in chat, but he's a good dude. I'm super stoked for you guys, man. Very well deserved. I love that it's up 410% from the bottom in May of 2022. Congrats, guys. Let me look at the financials on this one. I haven't paid too much attention. Probably should have. I see their advertisements a lot. All right, revenue solid, net income positive for the first time in a quarter. Look at that trend. I mean, it was very good. And now cash is turning up. Very low debt. Operating expenses are going up, but outside of you see R&D is a lot of that, right? If you hack off R&D, we haven't actually seen a super steep increase since, Q2 of 2022. So that's cool. Yeah, this is exciting for the people that are in this. And look at their estimates, still trending up. They might be negative again for net income, but they're close. And if they just start getting profitability more consistently, this could turn out really well for them. So super stoked for you guys. I would though, let me go to HIMS here. I mean, if you haven't taken any profits, I'm going to take a little bit of profits, especially tomorrow. If we're up 35, 40%, if we scale up to like $15 or something, that's pretty sweet. I mean, again, you don't need to exit the whole thing. This is looking like the birth of a great company. But if you're worried about the macro environment, again, if we got near 25, you'd probably want to take some profits. But solid, beautiful, beautiful wick here. Biggest ever in the company's history for that week. All right, let me see here. EXPI. I don't know what that is, so let me go and make a copy. I feel like I might have missed some. I hope I didn't. I'll go back in a second here. All right. Express World Holdings. Don't know who you are. All right, I like the fact that they're getting above this resistance line. Let me draw a fib-based trend extension real quick. And then we'll look at who this company is, because I don't know jack shit about them. All right, so they got a lot of window to 21. It's not a bad number. Now, what do their financials look like? That's the real question. All right. Financials. Net income went negative. Don't know why. Cash is still good. Revenues have kind of flattened out for this company, huh? Only 5% growth. P of 157. Operating expenses are flat. Cash flow was negative last quarter. Operating expenses skyrocketed. I don't know a lot about what this company does, but I don't love what I'm looking at. I'd want to know that they're better. Let's look at estimates. Okay, so they're expecting a little bit better in the future. I don't know how often these guys hit, but yeah, it's just kind of choppy. I don't know if I see why these guys have such a high PE. I don't know. I'd be curious to know more about them, but not too excited. All right, let me make sure I didn't miss anybody here. Trying to hard. All right, so hymns, EXPI. Let's see, then a bunch. Okay, Roku. Let's pull up Roku. I think I got that one. No. Okay, make a copy. This is one of the Kathy Woods ones where I do not understand it. I'm not a huge fan of Roku. I mean, don't get me wrong, I have it and I use it. I just don't know. I don't know if I would call them like super innovative, unless there's stuff about them I don't know. All right, so the stock kind of looks like shit. Sorry, that's my nice way of saying it. Here's what I don't like from a technical level. Here's what I don't like, and I'll be nice. I'll draw it from here. What I don't like is this is a bear flag, it looks like. Or even worse, a rising, broadening wedge from a massive drop. Neither one of those things do I love, and honestly, this would probably be more accurately drawn like this. I would not be in the stock, man. There's so much better stuff out there. Let me look at their financials real quick and see how they're doing. I don't know why Kathy's isn't interested in this company. She's got some really shitty picks. I mean, I love her, and she has great ones too. But she also has really shitty ones, so you need to... revenue's growing, okay. But these guys have been burning for 2 years. They're losing money. Their cash to debt isn't bad. They're not bad on shares. They're controlling some operating expenses. They're still putting a decent amount into R&D. I would really love to know what their R&D is actually doing and how it's going to benefit them. If I knew more, that might get me more excited. But this chart does not look great. And if these guys don't perform, I could just see this continuing to get butchered. That's my honest take. MCD. Is that McDonald's? Is that what we're talking about? Let me see here. I don't think I have that one, but I'll check. And this is, I've said this before, guys. This will be good. As we build up different tickers, we can start to learn from each other, and we can start to figure out which companies might be interesting and which ones we want to, start looking at prices at more often, which ones might be a great opportunity. So the more that we do together, the better. And it'll get quicker too as I get these charts built out. McDonald's, wow, that's just a ridiculous, straight up. That's just stupid. That is so stupid. Look at that. It just keeps going up. This is going back to 2015. It just this constant, steady growth. Not a Bitcoin or anything like that, but boy, man, is this company well managed. I mean, look at this. 2003, just like do. Do these guys do dividends? They do. Gotta love that. This is a tough one to draw a chart on, but let's do it. Because I can tell you what it probably is. It's probably just this. It's going to be over here in a while. It's not going to be anything crazy. If it gets a big drop, like in March of 2020, and goes from 218 to 125, like look at that. And that was literally the world shutting down, and it still couldn't keep the price down. I don't even think, I can't draw this chart. Here's the chart. Here's the chart, dude. I'm just going to give it to you. Here's the chart. So just calculate out whatever time frame you want, and that's where you'll be. So if we go to 2027, you'll be at about $370 and you'll have made a bunch of money off of dividends. So probably a pretty good return. Me right now, I'd say there's better things out there. But if I was just coasting it, this is such a stable like performer. This would definitely be in my list. All right, let's see what else we got here. MCD, what else we got? XRP. Oh, I wouldn't own it. This is one of those that I've talked about. I don't even have it on here anymore. I've owned this. I made money off of it. I just wouldn't own it. So from cycle to cycle, 93% of cryptos don't keep up with the rate of what Bitcoin does from one cycle to the next. So only 7 out of 100 or 7% of them will get you a better return just at any point versus Bitcoin from one cycle to the next. And then in 2 cycles, that's like 2%. So you got a 1 in 50 chance of outperforming Bitcoin. So when I look at old shitcoins, I just ask myself, will it outperform Bitcoin? And history tells us it will not. This one, I don't know if this is the oldest. Oh, this isn't even that old. That sucks. Let me see if I can get I'll use a Binance one or something. That should be a little better. I don't know if they're US dollar pairs, but whatever. But my whole point is, okay, so let's look at this. Let's see what our odds are about performing Bitcoin. So 2013, this got really good. And then in 2017, it pumped. There's this crazy wick. Just ignore that. That's a bunch of just insane stuff that happened around that time where somebody got a good deal. But the 2017 peak was the end for this one. And again, so this one was born over here. And then it had its second cycle and it did great. It did great. Probably outperformed Bitcoin. And then it'll never do that again. The next cycle, it didn't even get to its previous high. Bitcoin did. And then it won't do it again. So maybe we'll get lucky and go up to like $2 and get 400% returns. But almost all the other shitcoins I'm invested in are going to get me 10x or more. Solana might even get you 15. Here's the thing. Let these go. Let them go. Let the old shitcoins go, the ones that aren't going to do well. Look towards stuff like Solana. Look towards Ethereum. Look towards some layer 2 solutions. Look towards some of the stuff that I have in my portfolio here. And these aren't even like, there might be better ones out there. This is just a decent list. I would look towards these. Don't look towards old dying tech. And that's what those are. Unless there's just something incredibly innovative that I have missed, I would let it go. That's my honest take, man. Because all these shit coins are worthless in the end. Almost all of them. So you might as well lump them together. ARM. Let's do ARM. Let me make a copy here. That's my take. Probably be the same take next week. All right. ARM. ARM. Everybody loves having ARMs. And they seem to be really popular lately in the investment world. Is this the ARM processor? Is that what this holding company is? Let me see here. So this isn't horrible. This chart is not horrible, but it's a little weird and wonky because I don't have like, I don't have a good way to draw this. So let's look at the fundamentals on it. And I probably could draw this with a small trend-based fib extension, but I don't know that it's worth it. All right, so is this the chip, guys? Are we chipping here? We're chipping. Okay, all right. So their revenues suck. They haven't went anywhere. Their net income is getting lower. Their cash flow is getting lower. Their cash on hand is getting lower. Their debts haven't changed much. Their operating expenses are getting better. I don't hate that. Let's see what else we got here. They just kind of seem like a shitty company. Unless there's things like, again, some things are getting better here, okay? Some of the ratios are better. But, and EPS estimates are higher soon. But, and maybe the stock will do all right. But is it because of their work? Or is it because of NVIDIA? Is it because of NVIDIA? It probably is, right? So October of 2023, these guys were at $46, and now they're at $137. I wouldn't own this. I wouldn't own this. I would own Nvidia. I bought Nvidia today. I wouldn't own this shit. My 2 cents. Unless you know something I don't. But otherwise, I would say it's trash. I want growth, right? I want things that are going to grow. I want things that are going to get better. I don't know what the roadmap looks like. Maybe it's wonderful. Maybe I don't know that. Maybe that's the fundamental thing behind why you're asking about it and why I am poo-pooing it and saying that it's trash. It could be the fundamentals. That could be the difference, right? This is interesting. Ugh, kind of don't love it, though. So we've had a major drop in this one. Almost looks a little fintechy. The thing I don't like is, though, it had an opportunity to go higher, and now it actually looks like it's trending down. Now, it is finding support on this peak volume, so that's good. What do the fundamentals look like, though? What is Grab? What is Grab Holdings? A lot of holdings. What are you guys? Ooh, you've actually had good revenue. Your net income is almost positive. I don't hate that. Operating expenses have actually trended down over the last couple years, but are very stable. You got cash flow positive last quarter. Shit, this is not horrible, actually. 61% year-over-year revenue growth. Is that going to stay? Look at this. This is actually really great. I need to understand this company better. So you guys are going to become net positive soon. And you have increasing revenues projected for the next couple of quarters. Huh. All right. I don't hate this one. This will actually get me to write it down. That doesn't happen too often. So, all right. I'm going to try and find out more about this company. And this is what I want to do. I want to get better at this. I haven't done a lot of it. I did look at a few others from last week, but I want to get better at taking your guys' input, finding opportunities, and then doing a deeper dive into them to figure out if they're going to be an opportunity. I don't hate this one. The chart setup looks great. It's really nice. And then you have fundamentals that actually work. Even though I don't know who these guys are, I don't hate what I'm seeing. This is a good one. Or could be. All right, so that will need more work. Let's see what else we got here. Let me go back. I did XRP, I did Bitfarms, I did HIMS, I did ARM, I did Grab. Any luck in Vegas? I don't gamble. I know it might sound really weird because I'm up like $500,000 in this week, but I put $0 into the slot machines, so I will never have luck in Vegas because I can't even do nickel machines, man. When I was doing nickels, it stresses me out because I don't like the idea of losing money and knowing that I'm supposed to. I'd rather have an opportunity to make it and have the odds on my side. All right, Lemonade. Oh, this one's running. That's sweet. Their earnings must have been good, or is it happening? Earnings 27th today. Did these guys already report? I don't know. They're down after hours. Setup looks nice. I can't remember if I looked at the fundamentals. I feel like I did. Maybe the fundamentals didn't look as nice as the setup. I feel like there was something. No, revenues have been climbing. Oh, the net income burn. 61 million. They're just losing cash. I hate that. I hate that, man. I like to see my companies able to manage a budget, especially now. Especially with the concerns of a third war with China and the potential of, banking system concerns and a slowdown across the global economy. China's already starting their depression, I would say. I don't know. I want to see companies that are making money. It just makes me feel a lot better about them. I do love the spike. If I was somebody who benefited off of this with a call, I'd probably be looking to run away. Unless you know something about earnings. Oh, earnings just came out? Yeah, I'd be curious. They couldn't have been too good if it's down 5.66. That's my guess. But I don't love the fundamentals look of this one. Could be wrong. Been wrong a lot in my life. I already did ARCG. That was right at the beginning. So if you're interested in that one, take a look. DNA. They got a huge bag of DNA. Okay, let's see which one. I got to say, I love the effort for the ticker. Because if you're going to get a genomic-related ticker, I can't think of a better name than DNA. But there's also companies like C3 AI which people invest in them and their shit. And the only reason they invest in them is because they're AI. So you got to love a ticker with a good name. So I sometimes wonder what about the fundamentals. And for some reason I pulled that up. That's what happens. My brain just does whatever comes out of my mouth. All right, here we go. So this one has been heavily beat up, obviously. Heavily beat up. And let me see what the fundamentals look like. Does it deserve to get beat up? I mean, it's a genomic company. All these companies deserve to get beat up until they don't, because their revenues are just so choppy. So revenue's decreasing dramatically. Their net income almost looks like it's handling it pretty well. It's probably because they've done a great job managing their operating expenses. But what scares me here is, like, when are they going to start getting better? I just don't know. With these companies, you almost have to, like, know, oh my God, I've done all this research and they're on the cutting edge of this one piece of thing, and it's going to come out, and the probability of success is like 90%. And so I know this is happening, so I don't even care about the price where it's at right now, because I know the fundamentals are so good. Otherwise, it's like gambling. And if you're going to gamble, stack those odds with ARC-G, where you're not betting on just one thing, you're betting on a bunch. And the overall sector, like, you don't have the risk of individual company and all the research and having to know all the things I just said. You can just do a pool. And with this, the thing I love about it is, as an options play, it's like I think it's 6 to 10x or something. If it goes up 135%, it's like 10x versus the underlying, which I love. You know me, I'm the asymmetric guy, so I'll take a 10x. The underlying. But that's kind of what I think with a lot of these, unless you know a lot more than me, and that is very possible. And if you know a bunch of stuff, then what I'm saying could be BS and you've got a great entry here. But again, I just don't, it's just really hard to draw some of these, because all they've ever been is pain, and with a lot of them, all they ever will be is pain. But there will be some that succeed and do really well, and I just don't know who those are. I am not that person. All right, let me see here. All right. Boy, my rants. I'm getting a lot ranty today, aren't I? AMD. Let's check out AMD. Pretty sure I got that one already. Better. I don't know. I got my hopes up. I think these guys are going to do well. I still think they're going to do well. I like the fact that they back tested this previous resistance zone so many times, and then it's just a matter of breaking out of the .786. That's really it. And this is a long fib. This goes way back. I'm drawing this to 2015. But you can see where, again, we've been in this range here, but we took that previous resistance and turned it into support instead of going back down to the .618. I love that kind of move. And here's the thing. If AMD is really getting ready to produce, I won't even, like, a slightly less or slightly shittier version of, NVIDIA's cards. And I don't even know if it's the H200 or 300, I can't remember. But if they can be remotely competitive at a lower price, NVIDIA's got over a year wait on these cards. And if they've got a year wait, this company can benefit from just filling that gap, as long as they have something decent. So, and I think they're probably going to do it. This is probably a decent bet, in my opinion. I would stack more on this company if I end up making too much off of my fintech plays and crypto plays. If I make too much, this is one company that I'll overflow into, along with like Palantir, probably at the top of that list, and a few others that I'm not really in right now, that I would be interested in stacking. So I like this chart. It looks cool, man. All right, Palantir. Yeah, I got to at least do Palantir. All right, let me pull that up. I don't know if I'll get through all these. I'm going to try. The win. I was right next to a win. All right, I'm going to try and get through a few more of these. We're going to fight the good fight, since I bailed on you guys yesterday. Palantir is actually looking pretty strong. Again, you can see where it took this previous trend zone and it turned it into support, and then it bounced off of it. And it's got that S&P inclusion narrative. I wouldn't expect, like, you're not going to get 200% on Palantir, right? It's not going to be a Bitcoin miner. It's not going to be one of these fintech plays, especially if you're in calls. It's just not going to be that over the short term. So if that's your expectations, you're invested in the wrong thing. But could it go to 30? It could. It could. Could it go to the all-time high potentially at 40 to 45, depending upon how you call it? It could do that in the next year. I wouldn't expect it to go much beyond that. And I think it would be greedy too. I mean, it's already up 315% in a little over a year. If it gets back to its all-time high, it would be 700%. You just have to be realistic. This is a real company. It's not a crypto. It's not Bitcoin. This is a real company, and there's only so much growth that will occur all at once. So that's what I think about Palantir. But I will look to add to this because, I think it's more upside than down. All right, Mara. Yeah, we can pull that up. Mara, again, we're going to have earnings tomorrow, so we'll go over that one in detail and probably even listen to the call. I don't know why this says Argo. I'm going to relabel that. One sec here. Let me rename this. There we go. All right, so let's look at Mara. I need to do some redrawing. This does not have as much in it as it should. All right, so let's look here. We got... okay, I need to draw it from here. This, like many companies, has been other stuff in the past. So we're going to February 2020. It's a nice, good place to draw a fib-based trend extension. All right. And then we'll drop this down because a monthly chart is kind of hard to understand. All right, so I like the fact that Mara is under, let's see here. Yeah, okay, I like that too. I like the fact that Mara bounced off the 200 moving average and went higher back in, January. So when we went back down, we hung there, and I think that's great. Mara has the largest stash of Bitcoin out of any company. I think that there's some things that are sketchy about this company that personally I don't like. Missing filings, short reports that are about a year old. There's just things that I don't love about this company. But if they don't implode because of some weird corruption or something that might be alluded to by some of the things I just talked about, these guys could really take off. Again, I'm trying to, even though I don't own it, I want to be unbiased here and give you guys accurate information. So I've told you I have concerns about risks with this company. Now I'm telling you that their net income was already positive in Q3 of 2023, back when others were not. Their revenue has seen a massive uptick. These guys are smart. They buy Bitcoin at the lows and basically borrow against, shareholder dilution. As you can see here, like look at some of these pumps in dilution. They were grand in scale, but they were smart. They were buying Bitcoin and they were buying mining equipment at good times. Now, I don't know if they sold really well. I don't know for sure. Maybe somebody else knows that at the end of this last cycle. I don't know how good of a seller they were. I know CleanSpark did a good job. I don't know about Mara. I wasn't really focused on them last cycle because, again, I just kind of gave up on them. They always miss dates. From a Bitcoin miner like management standpoint, not great. They just had like a month and a half of downtime of like half their net hash. Like they've got issues and they've still got debt that's higher than their cash position. I don't love that at all. But from a Bitcoin standpoint, their holdings are so huge. But almost 400 million in Bitcoin holdings right now. That they're going to benefit greatly from that FASB ruling change, accounting rule change. This company can really crank out some numbers. Now, I think most of Q4 was okay, and they're going to be able to apply those accounting rules. Q1 might be a little rougher for these guys because they had so hash down for so long, and they probably still had, a decent expense base, but not as much revenue coming in. So Q1 could take a little bit of a hit, but I think this Q4 that's going to be reporting tomorrow could be very strong for these guys. And if it looks very strong, maybe we get to 47 real quick, just to give you a heads up. So I think that's probably it with Mara. I think that's what we're looking at. All right, Palantir I already did. More I did. New is just a great stock. My buddy Tanner just loves that one. All right, thanks for joining the starter pack. All right, let me see here. Let me go back up. Reacts. Let me do that first. I don't know what that is, but that's the next in line. I'm probably going to do a couple more here, and then I think I'm going to get tired, guys, and probably bail. I want to spend some time with the fam and chill out. But let me get you in here. I do love that people seem to like the charts. I'll have to do a poll about that, but I think you guys like them. All right, the real brokerage. This has already ran a decent amount. Went from $1.70. Like, it's already went up almost 100% here from December of 2023. So that's 2 months. That's pretty cool. This might not be a great one as far as like opportunity ahead, but let me see. What was that? Reacts. Let me pull up and see if there's some fundamental behind why this is. Brokerages. Interesting. 92% growth. Massive increases in revenue, but a money loser. Not a heavy money loser. $3 million isn't much. Cash is strong. No debt. Share dilution looks fine. Operating expenses are going up, but at what rate? Let's see here. So revenue is growing much quicker than operating expenses, so I don't hate that, right? Like, these aren't really comparable. This is interesting. I don't know. A brokerage company? So they're going to be flat for a couple quarters. That might be a good time to pick them up. Oh, and they're guiding for like pretty negative EPS here for Q4. So maybe they take a hit over the short term. This might be an interesting one to keep watching, though. Whoever asked for this one, keep an eye on it. Let me know if it starts doing better. Let me know if it starts doing better as far as like fundamentals or anything go. I will draw this. Let me go back to 2020. Let me get this in here. I need to have a, oh wow, that looks nice. Look at that. Just cupping under that .382. Huh. So this could be getting ready for another leg. It might take a while. Again, the Q4 earnings look like it might hurt them based upon previous guidance. But if it surprises, I mean, $4 wouldn't be crazy. All right, let me see here. I think I've done quite a few here. PGY, like lemonade, PGY, U. Oh yeah, U. I did buy some U. Let me do that one real quick. I don't know that I care, and I didn't look at their earnings. I just bought some because it was so oversold, and I want to. Sometimes I buy just to track a stock. And I know we had talked about it in our previous one. It looks like it's okay. It looks like it went down. Let's see. Yeah, it dropped a lot, 26.68. Now it's back up to 31. So that's pretty good. It made up a lot of ground here after earnings. And let's see. I think it was guidance that sucked. All right. So yeah, this doesn't look horrible. It's down 85%. I love the fact that it bounced off of peak volumes here, and it looks like it wants to go higher. Maybe I'll buy more. I think I only have like 20K in this one or something. Just like a little tiny starter. Let's see here. Okay. Oh yeah, they had like some impairment. I think it was a one-time for net income. Otherwise, they were trending up. I don't love the fact that they have more debt than cash. Operating expenses a little higher. Yeah, so I love that the revenue is growing and that they look like they were trending towards positive net income. I'd love to actually see that happen. It looks like they guided a little bit lower for revenue, so expectations again are lower. I don't know, this might be interesting. I might add to my position. Doesn't look like a poorly managed company. I probably need to actually listen to the earnings and understand. Is that beyond? Is that beyond? BYND? If that is what I think it is, you just want to run the fuck away. Let me just make a copy real quick here. Or is this Beyond Meat? If it's Beyond Meat, then that's different. I might be okay. Beyond Meat. Okay, that's better. God, I was scared. I thought it was like a Bed Bath and Beyond thing. But that's BBBY, I think. Okay. Wow, this one took it hard. Woo! That's painful. That is super painful. Jesus. The people that rode that down. Let's Let's look at how much pain they went through. Let's figure that out. We got to give these people credit for what they went through. They lost, if you bought at the high, you lost 98% of your money. $1 million turns into what, 20,000? Is that right? God, that's right. That's so depressing. So, that's interesting. I don't know anything about what's happened with this company since, though. Is it worth anything? I know they had contracts. It's just, I've had this stuff and I wanted to eat it because I thought of it as like being healthy, but then I did a bunch of research to figure out how healthy it actually is, and it looks like shit. It doesn't look good. As far as the healthometer. And then look at this. Look at their debt. Look at their debt to cash. And we're seeing nowhere near profitability. Revenues are flat. This company will probably be bankrupt. Let's see how long it takes them. 217. Maybe a year and a half. They'll be bankrupt. All right. What else? New. Yeah, I can pull up new. I'll do that real quick. I almost did that. So yeah, year and a half bankrupt. That's my take. So I don't know that that's the take you wanted to hear, but that's why you come here, right? New is stupid. This is a stupid company. Tanner's stupid. I mean, I wish I would have listened to him and bought it, but yeah. So I think 12, 19 is pretty much guaranteed. It's just a matter of time. This is another one. I need to put this on my short list. This is another one where I will buy stock in it. I will buy stock in it, and I will add to it as I make too much in other fields. And I probably should have already. I think Tanner was talking to me about it. Yeah, over here. So it was $7, $8, and now it's doubled. And some of the stuff that I had over that time did not. So I did make 700% last year, so I'll give myself credit there. But new is one of the things that I made a mistake. I should have owned it. But I would expect it to get to 12.26 pretty quick. And then it's brave new territory because, I mean, the next one's 17 something. And then it'll get progressively gappier. Now, the fundamentals for this company, it looks like they did actually underperform in Q4. I want to see that. I didn't look at what their earnings were, but let me just visually take a look. I think I'm probably going to I might bounce after this. I did more. Okay, there's just a couple more left. I'll probably do the others real quick. As long as the list doesn't get too long. So Q4, again, revenue up, net income went higher, $360 million. That's sick. How big is this company? 53 billion? Is that right? Wow. So they're already pretty high. Again, you're paying a premium for these guys because they're so great. Not a lot of banks go for 92 on a PE. But it looks like the cash flow got a little red. Their operating expenses are up. I don't know, though. There's no red flags on these guys. They still saw revenue growth of 86% year over year. And their operating expenses are still their revenues outpacing operating expense. I still think this is a great company. Look at their employee share. Like you're seeing how much they're making. It's almost $1 million an employee. Yeah, it's $1 million an employee. That's pretty sick. Pretty sick. The only thing I don't like about this one is they're like a Cayman Island company, right? Like they're like one of these Chinese stocks where you don't really own it. But Warren Buffett's in it, so he's not a total idiot. All right, let me go back up here. All right, I'm going to do a couple more, and then I'm going to get tired. I'm getting tired. I think I said that already. I'm getting tired. So I'm going to save that. I'm going to pull up some Tesla, and then I'll get the Duolingo one, I think, and then I'm going to probably be done. All right, Tesla. Tesla tried to go up. We could still be in a bear flag. I hope we are. I really want this one to drop further, just so you know where my interests lie. I have about 170K, I think, in calls, June 2026 calls for this one. Maybe 160. I could be a little off. But I really would love to see it go lower because I would love for that to be like 250,000 or 300,000 in calls. I would maybe even do 400,000. So I hope it goes under. But right now we're going to struggle. We're probably going to fill the gap at like the 210 range or 208, I think it is. And then we could test up to like 213. Might be hard to break above that though. And again, we'll see. We really need to get above like 212, 213, and at least turn that into support so that we stand a chance to go higher. We're just not there, and I don't know if the environment's going to be there. I love the company though. I love the company, love the mission, love Elon. They deserve to be much higher than they are, and they'll get there. If you don't realize this about Tesla, this is what Tesla looks like over the long term. So everybody thinks, oh, nothing's happening with Tesla, it's boring. Yeah, okay. Well, say that to the people here that held on for years while it was boring. And then what happened? It went from $2 to $20. And then it grinded here forever, right? Forever. Years, 14, 15. These were shitty years for Tesla. They sucked. They sucked. From a fundamental standpoint, you could tell they were going to do good because they had a great product. But it was just a tough struggle the whole time. And so many people love to shit on this company. And if you held on, you made 3,200% or something, from $11 to 400 and something. So if you don't realize it yet, we're kind of there again. And who gives a shit if it does this for another year? This is your opportunity before the next leg higher, and the justification behind it will be much greater this time. All right. Duo L. Biddy's fee. Yeah, but I think, isn't Biddy waiving that for the first 6 months? BITI? I think they are. Anyway, I don't like them as much. I don't like BlackRock. I would rather put that money into something like FBTC, I think it is, the Fidelity one. Fidelity is a true advocate for Bitcoin, and they're good people. They're the ones I would put money towards. All right, no Duolingo, so I will make a copy. Then I'm almost near the end. Almost have a reprieve. I'm assuming this is Duolingo. Whatever. Let's see. And then I'm going to call it. Wow, I can't believe this many people are sticking around this long. All right. Duolingo. You guys must like the charts. All right. Duolingo. Is that right? I got that right. Okay. I want to see their fundamentals. They're kind of, pushing up, but I want to see what these guys look like. I know I've used a couple of the products. I liked it. Wow, net positive. Isn't that interesting? I don't hate net positive, guys, for their income. And the revenues are just consistent growth. This looks really nice. Cash growing. Expenses not really crazy. R&D is probably the biggest amount. Outside of that, it's almost flat going back to 2021. Nice cash flow. 43% year-over-year growth. I love the fact that the operating expenses is actually, the revenue starting to pull away from OPEX. And they could dial that back with their R&D, unless they really know that there's something good ahead that they're working towards. But these guys could have 4 quarters. Huh. That's fascinating. They're aiming for their 3rd quarter of net income profitable. Huh. All right, let me look at this chart again. This is actually interesting. All right, so we're gonna. Nope, I'll have to. I don't really have that to work off of. What is this? May 22nd. Could kind of draw this out. Yeah, this will probably work. I could do a fib-based. I could do a fib retracement too, but I don't think that's going to be right. Yeah, this is good. So you can see where the 1.618, you can see where it established support on that. Fundamentals behind this company look great. I would assume it's going for an all-time high in the 240 range, and it might even get up to the 300-ish. This looks like a solid company. I don't hate it. Oh, not BlackRock. Which one is it? Their fee is 1.33% inverse. Yeah, I know GBTC is high. I'd like to support the fund that has done a great job supporting Bitcoin. That's just me. I don't care about a 1% fee. But that would be the company I would focus on. Okay. I think I'm tired. Oh wait, there's one more. I'll do PAGs. I'll finish this off. Okay. And then I'm done. No more. All right. I'm going to eat because I'm hungry. All right, this looks interesting. It's definitely had a breather. What time frame is this? March 2020. Pretty easy one to draw off. Peguero, is this a, oh, so it's Spanish. Oh, I missed that a little bit. Oh, nice job establishing a base here. Oh, I'm not drawing that well. It's close though. All right, so we perfectly established a base off the fib. We're headed towards 15, probably in short order. Based on the golden retracement zone of .618, I would say this could go to 18 pretty easily without even looking at fundamentals. But you do have me curious, so I will look. Thank you for everybody who joined and contributed in any way. I appreciate that. All you members here, I really appreciate you guys. All right, let me see. Revenue is flat year over year. It's starting to flatten out. Net income, it's just a cash cow, like 83 million. It's not a bad number. 4.6 billion, 83 million quarters, pretty decent. Establishing a little bit of debt, trying to work operating expenses down. Let's look at what else we have here. Whoa, massive estimates for Q4 and Q1. Huh, makes me curious what these guys are doing. What sector is this? Visa against competitors. Oh, it's like Spanish Visa? Interesting. Huh, a lot of institutional investment. So this is like so new is like the banking of Latin America, and this is maybe the Visa of Latin America. That's fascinating. I'd wonder how good they are, what their fee structure looks like, if they're like fintechy. Huh. All right, cool. Yeah, this one, I mean, to me it looks like it wants to go higher. It's just that can it meet expectations for those estimates? If it does, then I would expect this to pop. Like I said, targets at 15 and 18. All right, I'm outie, guys. I'm tired. I'm gonna get some food. Thank you for the 225 that are still left. That's amazing. Yeah, earnings. We'll do the Mara earnings tomorrow too, and I'll probably make it a little bit longer. It'll probably be an hour and a half, maybe a 2-hour stream. So it should be a fun one. I'll see you guys then. Otherwise, take it easy and have a good night.